Oh, George. Not only are you working tirelessly to open the borders of the United States and flood us with the immigrants, boy, on top of that, you're also buying trash stocks. I thought you were a legend in the investing community. I thought you got 30% returns. I thought you broke the Bank of England. And then I see what stocks you're buying, and I just cannot believe what I'm looking at, George. You should hire me, Christopher Belly, as your certified CPA accountant and professional stock picker. Because in about 5 seconds of perusing your 13F filing, I'm starting to think you're a freaking clown, boy. Yeah! In this episode, we're going to review another stock that has been purchased by George Soros. Biohaven Pharmaceutical Holdings. Now, apparently George Soros has a 10% stake in Rivian, which I just roasted, and now he's investing in this Biohaven Pharmaceutical Holdings. Now, I looked at the stock chart, right, and I said, okay, look at this absolute collapse. What happened here? Why did this stock collapse? 151 all the way down to $13. What happened? I mean, is George that dumb that he had a stock that dropped 90% in a day? Well, there's more to the story, okay? So this Biohaven company does a bunch of basically scientific research, and they're working on developing cures, treatments for rare disorders like, epilepsy, mood disorders, OCD, spinal muscular atrophy, and pain disorders. Now, apparently, Biohaven Pharmaceutical Holding Company was recently acquired by Pfizer, but Pfizer only wanted a part of that company. They only wanted part of that acquisition. So what happened is there was a spinoff called Biohaven Limited that was spun off that Pfizer did not acquire. But Pfizer did acquire the old combined company, Biohaven Pharmaceutical Holding Company. So this Biohaven Limited that I am pretty sure George Soros is invested in is just a spinoff. Now, I read a little bit more from this most recent 10Q, right? Because remember, George, he's got an investment in this. I mean, he's bullish on the stock. Well, I saw this thing called a going concern. And when you're looking at a stock, the first thing you should do, just do Control F and type in going concern. All that means is you're assuming a business is going to continue its operations indefinitely, and that kind of affects how you view the assets and liabilities on the balance sheet. You know, do I value assets at liquidation value or at their adjusted cost basis or what? Whatever. When you see notes about going concern, you want to read them. They're very important. So I kind of skimmed this. I mean, I'm not buying this stock, of course. But I saw a very interesting comment here. Let's zoom in just a tad bit. Hopefully it doesn't jump me everywhere. To execute its business plans, the company will require funding to support its continuing operations. Until such time as the company can generate significant revenue, or from product sales or royalties, if ever, it expects to finance its operations through the sale of public or private equity, debt financing, or other capital sources, including collaborations with other companies or other strategic transactions. So basically, what are they telling you here? They're going to go pack on a bunch of debt, and they're going to dilute you massively. Now, let's go look at the financial statements. And once again, I'm like, George, okay, I mean, like, of course there's probably something that I haven't seen here. But as an individual retail investor, I'm not just going to follow George Soros into this, because I'm looking at this, and this is just an investment disaster, okay? He has a reason that he bought this. Why? I don't know, okay? Let's look at the financial statements. So what do we have here? We have current assets of $80 million, $80.5 million, 50 of which is cash, 17 of prepaids, almost 18 of prepaids, and 12 million of other current assets. I wish they would break that down, okay? Current liabilities, 28. So they have enough cash to pay their short-term debts that have already been accrued within a year. That's fine, right? Their total liabilities are $35 million on $135 million of assets. So you look at this and you're like, okay, I mean, they have enough money to pay short-term debts. That's great. They really don't have any long-term debt. They have $7 million of long-term debt, and they have 18 million of PP&E. They have 18 million of intangible assets, not much goodwill, and whatever other non-current assets. So looking at this balance sheet, it's pretty solid, okay? And we can see the equity. It says net investment from former parent. Interesting. So the balance sheet on the surface looks great. I mean, you know, they're not in massive debt, but there's a problem. Oh my God. Let's go see what the problem is, okay? This is the, I'm sorry. This is the income statement, all right? If you notice, the first line is operating expenses. I don't see any revenue here, okay? In 3 months, they incurred $52 million of research and development and almost $15 million of general and admin for a total of $67 million of operating expenses. Their bottom line net loss was $68 million in 3 months. If you look at it over 9 months, their bottom line loss was $369 million. They're literally producing no revenue. They have no patents, products that hit the market, research that's actually helping people. This is speculative garbage. You're just buying. It's just like any other biotech stock where you're hoping one of the treatments somehow hits it big and it pumps up and you get rich. Now, this company's obviously going to be massively diluting, okay? There's going to be massive investments, and the original shareholders are going to be absolutely crushed. Because at the end of the day, this company's doing nothing. Absolutely nothing at all. I mean, look at the cash used in operations. $222 million were burned in 9 months. We go back and look. Let's see. Okay, their total assets, they burned more than their total assets in operations in 9 months. So this company needs immediate injection of cash. I'm sure they've already diluted by now. I mean, look at this. It's September 30th. This company is a cash furnace and it has zero revenue, okay? If you buy this, you're going to be diluted to kingdom frickin' come. And you're just praying that something works out for this company and it somehow generates any kind of revenue whatsoever. So, George, I mean, like I said, maybe he knows something I don't. If I see something like this that doesn't even have revenue, I'm not buying it. Okay, it's stupid. This is speculative trash. And you should never follow somebody like George Soros because he has his reasons. I mean, look at this. 6.5% of his portfolio is in this. Why? Well, that's it. I don't know what else to say. You guys have a wonderful night. Cheers.